3rd of November, Thursday, Cal's MAO. Oh gosh, Federal didn't pivot. This is something that I've been saying to a lot of people around me, and I've been saying that I don't think the Federal Reserve will pivot because the inflation is still ongoing, and if they need to go down the PCE data to 2% to 3%, it's impossible. And of course, what happened? The Dow broke down below the MA 200. This is the most critical part for today's session, and you really must pay attention to detail, and let's go. Alright, once again, before we go into the market, make sure that you do your risk assessment properly yourself, and of course, make sure you calculate all the potential risks involved. Yep. And thank you, Ames, once again for the kind sponsorship. Now, do you remember what I shared yesterday? Now, I gave two directions. I said that the Dow may see 34,000 or we may even see 28,000. Now, when I sent out this thing, quite a bit of people have texted me on the site and asking me what's my real feel on this. And I've been saying this. I said that there's a very little chance that we'll see the Federal Reserve pivoting. So that's why I still believe that the 28,000 is more a possibility. And of course, if you remember, Mike Wilson from Morgan Stanley says that this is just a bear market rally and there should be an 11% gain from here. So I'll talk about this very shortly later, but do remember this. He said this on 17th October itself, okay? So what I did was yesterday I showed you my personal view on the market, and I mentioned that if the market failed to stay above the MA 200 and with the RSI at the 70-point range, most likely there will be some selling. And I also share with you this very important disc called the JNK ETF, and I say that the JNK ETF has already came off 2 days before the selling. And all these things itself, you don't get it from mainstream media, you get it live right here yourself, and I'm glad that you guys have benefited from it. So we have, if you remember, Jerome Powell already said that he vows to raise rates to fight inflation until the job is done, and that was on the 8th of September. So think about this. This guy has been pretty consistent, but it's Wall Street who have been keep on coming with all this funny thing from this, okay? Wall Street says that, right, there'll be a potential of pivoting coming in, believe that it's going to be a tinkering process, and felt that, right, there should be a lowering down of interest rates. But we saw what happened. The Dow Jones closed down 500 points last night, and at NASDAQ, which is very sensitive to the interest rate factor, dived 3%, okay? So all this information tells you that the Federal Reserve is not going to budge on this. Yes, they may do something to slow down the interest rate figure, the hiking number, but still they will keep on hiking until we see a substantial move down in the inflation. So this is what actually happened. Okay, let me just bring it back to you now. Now, throughout the whole entire day, it was pretty flat. Okay, but very interesting. About 2:30 a.m. Singapore time, the market started to move on its own. Okay, it had to move on its own, and then after that, the market just blast up when the announcement came out of the 75 basis point. Now, because the thing is this, when the 75 basis point came out, right, the market actually says that, okay, yes, we have 75 basis point, but most likely we will look towards a slower down in the rate hikes. Okay, the point is this. On the positive side is like, okay, fine, finally we see a little bit of pullback in the number, the amount of rate hikes, okay, in terms of the percentage, but it's still going to be ongoing. So think about this, is if I'm telling you now that it's going to be a 75 basis point today, then the next time it's 50, but the next time 50, then 50, it's still the same thing, right? It's going to hurt. You understand my point? So that is what the market buys initially, okay? Then when Jerome Powell started to meet with the journalists and the journalists asked him some question, or that is where it all breaks. Because when Jerome Powell came in and says that, you know what, we really need to look at this in a very different way right now because the market really need a different thing altogether. The market feel that it's too premature to look at the Fed to pause rates, okay? So this means that there will be more rate hike coming in, okay? More rate hike coming in. It's just that it's smaller in terms of the hikes, but there will still be continuous on this sort of, right? And that is where it gets scary. Let me bring a video for you right now to take a look. Alright, so you can see that Jerome Powell came in and said that it's very premature to have this rate hike. And Powell said that I don't want to fail to tighten enough, loosen too soon. Okay, so that is a very critical thing that Jerome Powell say yesterday. And the moment he said this itself, the market just dived down all the way, because it's very clear. Because think about this, all right? You think about this. Jerome Powell, he can actually print to revive the economy. But if it's going to be scary, if the economy, inflation continue and it's no stopping, and that is the reason why he has to really stay strong with his decision. So that was what happened after that. The Dow Jones, the NASDAQ, S&P 500 just dive all the way, and of course the dollar recovered and stuff like that. Okay, so that is what actually really happened. So let's look at what he really said. Okay, so the Federal Reserve approved a 75 basis point. Okay, and that is to take the rates to the highest level since 2008. So back to Lehman Brothers time. And of course, what's happening right now is that, right, he really vowed to beat inflation and said that the central bank will have to raise rate more than expected. So the market freaked out on this political statement. And I've been telling you guys this, that it will go up to 5%. When I was saying this back in a few MAOs videos earlier, people saying that this is ridiculous, Cal, you don't know your economics, it's like 4.25% is a maximum and go, blah, blah, blah. I say no. I say that it's going to be 5.5 at least, okay? In my opinion, this rate will go up to 5.5%. I'll write down for you guys just to make sure that you guys remember what I say. I believe that the rate hike is going to go higher until probably about 5.5%, okay? This is something that I believe that it has to go there. So then we can see a little bit of pullback, because think about this: so the mortgage rates will go high, and of course costs will increase for everybody. Everybody will pull back, and of course the stock market will also be hit. That is definitely for sure. So the Federal Reserve left the door open, reducing the size of rate hikes. Okay, the rate hike size reduced, but still continued. So that's a very big difference here itself. Okay. So from here we can see that the stock market fell. Okay, initially it was up, then after this thing came out, it sold down. And the thing is now everybody is looking at that, you know, this is going to go higher, right? So from 5% to 5.25%. From the Bank of America US chief economist, he said that the door is now open to 50 basis point in December after the string of 75 basis point. Okay, so if it's going to be 50 basis point, because earlier it's alright, the market was looking at 50 basis point today and then 25 later, but nope, now it's still at 75 and 50. So if you continue for another 50 basis point again, then definitely you'll burst past the 5% level mark. Okay, so that's something that you must take note of this. Okay, so why is that so? Because this is really bad. Because you can see right now, let me just do some management here. Okay, you can see right here that the this is the CPI data. It went all the way up. Okay, all the way up, went to 9.1, sorry. And then after that, we do see a little bit of pullback, but this is not enough, my friends. Remember, this figure is right, was an average of 3. Okay, average of 3. 2 to 3 level, but now it's 8.2, and for the last few months it's not coming down. But if you notice that, right, the crude oil prices is still not coming down too. In fact itself, right, let's bring in the crude oil price to take a quick one on this right now. You see the crude oil price. I'm going to show you later the Dow Jones chart too, but give me a minute. You can see right now the crude oil price on the day chart. Okay, let me just bring it to you right now. This is very important. Okay, so the month of July, we have the crude oil price at about average about 100 to 91. Then after that, in August itself, right, we have it from between the range of 97 to 85. Then the month of September was better. It was like from 89 all the way to 76. So that was a pretty good time. But now you can see that we can see a very strong U-turn right now. A very strong U-turn. And the thing is this: if this crude oil goes up and breaks above the $98, that is the MA200, this could bring it much higher. So that means that the fight in versus inflation is not winning. So from the month of October until now, it is much higher than the month of September. So this is not a good sign, okay, for the CPI data. And of course, if this continue now, employers kept hiking workers' wages last quarter, but they do not keep up with inflation. Okay, that means that even though that we have the employers increasing wages, but it's still not able to defeat the inflation. So the thing is that there'll be a limitation of the employers increasing the wages. If the wages keep on going higher and the company is not making money because of the interest rates and the cost increasing itself, right, this will break eventually, right? Don't you think so? And of course now the mortgage rates has went above the 7% mark, okay? And still And still, because the Federal Reserve is still increasing interest rates, so most probably the mortgage rate will go even higher, right? Think about this. It could go 8% or 9%. So if this is going to continue, right, you can see where we are now, that we are now the 5-year, the 5-year fixed, the 30-year fixed itself, right? All of them are now in mortgages are now much higher than what happened in 2008. So can you imagine that what will happen soon? Yes, indeed. The big recession is going to come in. So that's the reason why I felt that the big recession is going to come in very heavily, and that's slightly happening in February to March next year. Okay, so this is something that I've been staying with this, and a thing that you guys also been do remember that. And of course, now the housing sentiment has fell to the lowest level since 2011. This is not a good sign. This is from Fannie Mae Home Purchaser Sentiment Index. Okay, so that means it's quite genuine. So people are losing faith because cost is increasing, and people are still paying because they bought some good houses over during the pandemic time, and now they must facilitate this. So think about this: for people who jump in to buy in 2020 and 2021, now they're going to pay more money, and that is not a good sign at all. All right, so let's just bring you more to some stuff here. So apology on the PowerPoint here. There's probably some mistake that I done earlier. Probably need to save the file properly. Okay, so let's take a look at the Fed balance sheet right now. You can see very clear, all right? So the one in blue is a Fed balance sheet, and they are reducing because according to what Jerome Powell said yesterday, they will continue to reduce the Fed balance sheet. And of course, we can see that once the balance sheet get reduced significantly, usually the stock market will pull back, all right? So the thing is right now, you can see that the stock market is already reacting while the balance sheet is still coming down very slowly. But think about this. If the Federal Reserve already said that very clear, they're going to really increase interest rates, they're going to reduce their balance sheet, then it's a matter of time the stock market really come down. So that is the reason why I felt that, right, we still hadn't seen the bottom of the stock market yet. And of course, if you look carefully now into this, you can see that every time when we have the 2-year treasury yields and the effective fund rates moving upwards itself, right, you can see that the stock market will have a bit of problem here. Whether it's credit crisis, whether it's .com crisis, whether it's saving loan crisis, you know, it always repeats. Whenever you can see that when the both of them are moving up in the same manner, like in the 45 degrees, all right, you will see that there will be some crisis. And of course, later on, the Fed will pivot. Okay, it's just a matter of time the Fed will eventually pivot. That is for sure. Okay, so it's just a matter of time the Fed will pivot, but it's going to not be now. So something must happen first. Then we can see the Fed really consider to pivot. And by the time that happens, we all know that things will get very bad. But the problem is that if you look at a table, you can see right now, right, we have none of this, okay? We have only the most is that there's more bears than bull right now. And of course, the 5% bear market rallies, we have that. But the remaining is the rule of 20, the PMI improving, the yield curve steepen. All these are not there yet. So usually when there's a crisis itself, right, we get 80% of this list get marked. But now you only have like 2. So which means that there's still a lot of room for things to happen. So that's the reason why if you want this, just keep this list and take note of all these things. If these things are all happening, then yes, we are getting nearer and nearer to a major crisis. Okay, this is something that you need to take note. And of course, what we are seeing right now with the Fed fund rates moving upwards, right? Usually what we'll see the earnings coming down, all the forward guidance is coming down. And truth be told, apparently it's all right. There is a report saying that, right, out of 60% of the S&P company that reported earnings the last 3 weeks, majority of them has a lower forecast. All right, and they are looking at, you know, harder times and the time to come. So this is very clear that when the Fed fund rate increases, the earnings will reduce. This is something that is pretty simple to understand. So why is Wall Street so adamant? Because probably they know that they need to get something out of the market, maybe. So this is something that you want to take a look at. So whenever the dollar starts to go into the picture, right, you can see right now is that when the 10-year yield versus dollar annual rate of changes move on, you can see that, okay, you can see that we have all the major crises coming in. So all these information speak for itself, okay, that we need to be very careful because now the 10-year yield is moving up and this is like the highest ever since 1971. And every time when it hits around this area here, about 0.4, you can see that almost incredibly, right, you have all the crisis coming up out of nowhere. All right, so I believe that this is something that is going to happen. I can't really tell you when would that be, but my personal take is that it should be by December of January, something around there. Okay, that's my personal view right here. Okay, so the thing is this right now, before we go, let me just bring this to you now. We go to the charts, right? Let me bring this to you, right? Some people ask me, Cal, what is this all about, right? If you actually watch my video on Monday, I already tell you guys that you are entitled to win a chance to have a sponsored lunch with me. And the only way to do that is that during my video, you need to a quote that I will leave on the top right corner in one of the PowerPoint slides on Monday, Wednesday, and Friday. Okay, so on Monday, I left the word food. On the Wednesday, I left the word iPhone there. Okay, somebody said, where is it? Can't be found, right? It's there. If you watch carefully, all right, in one of the slides, okay, on Monday, Wednesday, and Friday, that word will be there. Okay, this is hidden in the corner so that you have to pay attention to details. And of course, once you see that word, just key in the comment box on a YouTube comment box. Okay, that's all you need to do. And after that, right, on the Saturday, I will combine all the names. Okay, I'll combine all the names. Okay, so if you do, you 3 times, you get 3 chances. Okay, that's the maximum you can go. And then after that, we'll do a spin of wheel, and on a Saturday morning, and it could be live sharing, and of course, you will be able to see whether you win that chance. Okay, all right. So that's something to take note of that. Okay, guys, make sure you do that. All right. So look at the chart right now, and let me bring you the MA 200 chart, the one that I shared earlier. Okay, guys, this is something that you must pay attention now. Think about this. Okay, take a look here. Okay, this is not a good sign at all. Okay, it's not a good sign at all. Let me just tell you this. Okay, so what we have is that the market, I told you guys, it will be above the MA 200 first usually, and then after that there will be a back, and this thing is called BMB. BMB, we should know, for all the TWB students, we know that. Usually it actually represents a turn of trend. And then we have the one that's here, which had the same thing. Okay, they went above the MA 200, no BMB this time, but it closed below the MA 200, and then the selling pursued. Right, so now guys, we have both of them. We have a BMB followed by a BMB, so 2 BMB side by side, and it basically U-turn at the MA 200. So I'm going to be very upfront here. Very simple to understand this. If the Dow Jones can return and go back up above 32,650 by tonight, okay, 32,650 tonight, the Dow will continue to go higher. Yes, you heard me correctly. If it does that. But if the market fail and continue to drop, because there are a lot of gaps, there's round gaps here, one more gap here, and one more gap here, right? It is possible that the Dow can pull back all the way down to 31,000 level, okay? So I'm not kidding you guys. You have to take note of these numbers here. It's going to be pretty scary, okay? And of course, for today, looking at my TWB chart right now, take a look. This is my KFC. And I already told you guys that most likely on this day, on the 1st of November, there could be a chance of a market turning around. So this is all, it's a forward forecast too. And indeed, really, the market was going up all the way to this day. And incredible, the next day, the market fell. So this is why I say that we have a very tool right here, and this is something to take note. Okay, so if you look at it right now, I'm going to show it to you with more details. All right, so you can see yesterday the market really went up above the KFC point, and that level is 33,031 I mentioned yesterday. But once it couldn't stay up, bang, the market sell down all the way. So in short itself, this will be a very critical resistance for the market. Okay, all right, so something to take note of that. Of course, I'll show you something else in the NASDAQ. The NASDAQ KFC, let me just bring to you right now, is ding-donging, okay, but the market failed to stay above the KFC yesterday, so that's why it's coming down. Now, there's a strong support at 10,832, so traders, you need to watch out for this, okay? The next KFC potential turn date is on 28th of November, okay? And just showed you some gold. Look at it. This is gold KFC, and basically when the market gold recover, it couldn't stay up. Bang! It came back down. So you can see how powerful this KFC point. It is really insane. And of course, for Hang Seng, it's way below. And this is what happened on that day when the market was going down all the way. There was some recovery. When the market failed to stay above the KFC, the market pushed down further, okay, further. And I believe that Hong Kong market should come down again below the 15,000 mark, okay. So watch out for all this information. All right, this is going to be scary because this is what I draw for you guys. You can see incredible. This is where the market hung. The China A50 stops there beautifully, and now it's coming back down. So 11,470 is still going to be the first base level, okay. Now I'm going to give a quick one on my TWB chart for today before we wrap it up. Now my we have the CCYR color change right now. My KRW has turned flat. Okay, so that means that the selling pressure is in the market right now. And there's a new BNB. So 34,109 will be the top side, okay, potential. The downside potential will be here. If the market loses 32,126, there will be some selling all the way down to 31,135, which coincidentally meets the MA30, which is 31,139. So it's gonna be like a pretty good chance to see this 1,000-point move. For the NASDAQ, you can see that we have the combination of the KSI and KRW now. That's where the red arrow pops up, and that means that there will be more selling. And this was a new BNB 2 days ago, and you can see the NASDAQ just flushed down all the way and tripped the BNB extension -1 times 1 in a single day. So where will it go? If the market stays below OP today, that means the next target is 10,682 based on the TWB KCB chart. Now the S&P 500 has done the same thing. A new BNB was formed on this Tuesday, and yesterday the market flushed down and hit the BNB beautifully, okay, the -1 times 1. Now it's trying to stay support at this 3751 MA30 level. If you look at the 15-minute chart, you can see all the green little dots there. You can see beautiful, right? So this is a very important support right now, 3751 for the S&P 500. So now it's recovering, okay, but what if it pulls back down and breaks below 3751? Then there will be selling all the way down to potential 3667, okay. All right, and crude oil, as we can see on crude oil is still trying to stay above the BNB RL level. The RL level is $88.55. Yesterday, the closing was just marginally above it, and now it's staying above it. So I'm going to say this, guys. If you're going to see the crude oil price going upwards and the stock market coming downwards, this is bad news, okay? It'll be very bad for the market, okay? So if the market stays above the BNB RL, then the first target for today is $90.48, okay? Take note of this. Support will be at $87. Now, some people have been asking me about my view on gold, and I've been telling you guys this. I'm very bearish on gold because I believe that the dollar will still be strengthening, and I believe that gold will come down all the way to 1604 in the near term, okay? 1604, okay? And last but not least, it will be the Bitcoin. Now, surprising this time around, Bitcoin didn't really get affected by this whole jing gang of this Federal Reserve. So there's a new BNB form yesterday. So we're going to have 19,300 to be the base, and 21,537 will be the top. Okay, so watch out for these two numbers. Okay, before we go, I just forgot to just update you one more time on this thing here, the dollar. Now the dollar itself yesterday formed and hit my trend line, my channel perfectly, okay? Just hit this point here and rebound. So now as long as it stays above the 112 figure, it should be testing the 114 level in about the next 2 months time, and that will definitely stock market lower and also bring gold down lower, okay? And of course, yesterday all the technology companies did very badly. You can see that all coming down, breaking all the support that I wrote. And of course, you can see the beautiful resistance that I said, 237 for Tesla. I said that if you cannot stay above the 237, it will pull back, and amazingly, it really performed the same thing. And of course, for OXY, it has pulled back due to the general market. But if crude oil price do move up again, I still believe that OXY is going to go towards the $80 mark. All right, this is Cal signing off. Wish you all the best. Bye-bye.